Is now starting. All attendees are in listen-only mode.
Good evening, everyone. On behalf of HDFC Securities, I welcome you all for this session on weekly FNO Outlook. Firstly, let me introduce myself. My name is Tarang Solani. I am the product manager for derivatives. And along with me, we have Mr. Devarsh Vakil, who is our deputy research head and who will give us the weekly FNO outlook on the market. So as a ritual, just before the expiry on every Wednesday, we do come out with this FNO outlook so that we can have some kind of an idea of how the market would pan out on the expiry day and also in the next week. So before starting, we'll just brief you over the flow for today. Mr. Devarsh Vakil will give us the outlook on the market, and post that we will introduce a couple of features of into our web-based portal which will help you to trade in the derivatives in much more precise manner. So post that we'll take the question answer session. So without wasting any time, I will hand over to Mr. Devash Vakil to brief us about the weekly FNO outlook of the market. Over to you, sir.
Thank you, Taran. And we are little sorry for starting little late. We apologize. Right, Taran, am I audible?
Yes, you are audible.
Okay, sorry for starting late. We can start now. So markets are basically in the range for last couple of weeks, and this time also we have seen that the short buildup is being seen, about 5% rise in the open interest, and Nifty is down by about 0.57% in the first 4 sessions of this expiry. Similarly, we are seeing about 5% fall in open interest in Bank Nifty, and Bank Nifty has gone down by 1%. So nothing much happening in the market. Now let's look at the options where they have been written and what is the distribution look like. So right now, as of now, we have closed at 17,895, so 17,900, around that we have closed. Now look at these bars: 18,000, 18,100, 18,200, 18,300, and 400. All this way across, heavy call writing has happened. So traders are not expecting market to move beyond 18,050 tomorrow. And similarly, though much lower, puts have been written at 17,900 and 17,800 level. So nothing much is expected. In fact, it's like a coiling of the spring. It is like a calm before the storm. Either market will break 17,800 in the next 7-8 session, or it will go beyond 18,200, and whenever it goes, we can expect a sharp move of about 2 to 3% beyond that range. So right now we are range bound and we will not preempt. We will wait for the opportunity. If market were to come down near 17,800 level, and that is the level at which we can find support here with that kind of stop loss, if you can go long, not tomorrow, but after the next expiry beyond the 12th of January. And if it were to come to 18,200 kind of level, if it breaks out, you go long. Otherwise, around 18,200 with that small stop loss. If it comes to 18,100, 200, you can lighten up your position or create temporary shorts also. So let's see what FIs are up to. So FIs on the 6th of January were at 0.7. So for every 7 long position, they had 10 short positions. They covered their shorts on 9th. Again, they created short positions on the 10th. So here also, like market, one day up, one day down. They are also trying to gauge the market direction, and nothing concrete is coming out of the data. So overall, there is small short buildup in Nifty futures. So market is likely to find a lot of resistance. A lot of stocks are being offered when market goes beyond 18,000 to 18,200 levels. A lot of call writing is happening between 18,000 and beyond. So at every higher level, market will find resistance. Be very careful on higher levels. FIs have been building shorts and they are net short position on the market. And 17,900 is tomorrow's maximum pain point level. So around 17,900 plus or minus 50 point, you can expect expiry. On lower side, around 17,800, there is some immediate support. And if market were to break 17,800, then we can expect a sharp down move. Let's look at the bank nifty. There also a lot of call writing between 42,000 here, 42,000 and 43,000, 42,500 and 43,000. Lot of calls have been written. Similarly, on the put side, 42,000 and 41,500 puts have been written, but the maximum open interest is in 42,000 put. So at lower level, a lot of puts have been written. So markets are right now 42,200. At lower level, there is some support in bank nifty. Let's look at the sector. So we are seeing some build up in banking and finance and telecom sector. So telecom, we are seeing that a good amount of 12% kind of shorts have happened. In textile also some kind of shorts have happened. Interesting areas where market, if Nifty were to move up or the markets were to do well, two sectors like oil and gas and metals. That's where we are seeing a good long build up. In oil and gas, stocks like HPCL, ONGC, and IOC, these three are attracting a lot of open interest. And in metals, we see that the Hindustan Copper, NMDC, and Hindalco continues to find favor with the traders. So these are the pockets of strong pockets where there is some kind of a small open interest has been built up. So if you were to trade long in oil and gas and metals, and if you were to short, look at the banking, finance, and telecom as a sector to go short. All right, that's what I wanted to share. Now over to you, Karan.
Yeah, thank you, sir, for your output on the market. Now we'll give you the some of the features which are available for the FNO traders, where they can use for doing FNO trading. So today we will discuss about basket order. It's a very good tool for a option strategy player who basically do strategies in the derivatives market. So for the strategies, it is very useful if you can trade in the basket order, because you want to initiate both the legs, or how much ever legs you do in the strategies to be executed on a one single order window, because that will not only save your time, but that too that will also give you an proper execution platform for your option strategy. So firstly, we will make you understand how you can use the basket order and how to calculate margin for the strategies which you have been doing it. So first, let us understand how to calculate the strategy using a margin calculator, and post that how to basically execute that particular strategy from our basket order functionality. So first, I will go to HDFCsecurities.com website to make you understand about the how to calculate margin for any margin calculator. So under products, under derivatives, there is an option called as margin calculator. Now suppose you want to initiate a Nifty bull call spread by buying 18,000 call option and selling 18,300 call option. So how you can identify how much margin is required? So you need to select option index. You need to select Nifty. You need to select the expiry. You need to select the strike price 18,000. You want the strike price of 18,000 to be bought of an expiry of 19 January. Click on buy and click on add. And simultaneously you want to sell 18,300 call option. So select 18,300 call option in this strike price column. Click on sell and click on add. And then now if you submit this, you will be able to understand how much margin is required. So you need to sum up total margin requirement plus total premium required. So approximately 22 to 23,000 of margin is required to initiate this strategy. Now, how to initiate the strategy in the basket order? Let us understand. First, you need to log in into your Trade or Empowered portal, where there is a basket order functionality. Under equity, once you log in into Trade and Empowered, under equity, there is there is basket order functionality. You need to click on basket order. You need to basically create one basket. First, whatever basket I have, I will just delete it. You need to create one basket. I want to buy 18,000 call option and simultaneously sell 18,300 call option. So I will select under derivatives. I want to buy option index, underlying Nifty. Here I will select the expiry. I want it for 19 January. I will select 18,000 call option. Now the price of it will auto populate the price 110. So I need to price at a limit price. If I want to place it at a limit, I need to whatever the price I want to buy. Suppose I place it at 111. I add this order. Now I want to sell 18,300 call option of 19th January expiry. I'll select sell. I will option index, select option index. Symbol would be Nifty. And 19 January and select 18,300 call option. So here it has been showing at 26 rupees 55. Suppose I want to sell at 26 rupees. I will add this order. Now this order, both these order have been added and I need to save this basket. Once I save this basket, I will have to go to place order basket. I need to select the whatever leg I want to initiate and place it in the exchange. I need to select whatever leg I want to buy. Sorry, one second. So it didn't got selected. One second. I'll just first select the basket, the leg which I wanted. So first I want 18,000 call option. I will select 18,000 call option. Expiry is 19 January. 18,000. I want to buy at 111. I will add order. Then sell 18,100, 18,300 call option. (19 January). How to sell it? 26. I will add. I will save this basket. Now I'll go to place the order basket. So here you will be able to see 18,300 call option is sell and 18,000 call option is buy. I will select both the leg. I will place this order. Once I place this order, once I confirm, both the orders will get into the exchange. If the price matches the criteria of the price which I have mentioned over here, it will automatically get executed. And this is how you can place the basket order and you can trade option strategy, and you can place the option strategy order from a one single order window, so that you don't have to basically, if you are doing a 4 leg strategy or 3 leg strategy, it becomes tedious to add all the legs and then execute it one by one. From this basket order window, you will be able to execute all the legs from a one single order window. So that is a very good tool for an option strategy player to use it in a day-to-day derivatives trading. So that's it from our end. Now we will open the forum for a question answer session. If anyone has any kind of questions, we'll please request you to write it on the question answer section, which is there on the right hand side of your screen, and we'll try to reply you back as many questions as possible. So we'll please request you to write all the questions, whatever doubt you have in this, in terms of understanding market outlook or in terms of understanding the basket orders and margin calculator. So please write it down, whatever question it is, we'll try to reply you. So one question we received by Mr. Dakshesh Shah is, can you explain bracket order with example? Yeah, of course. The bracket order is a functionality for the cover order. Now we'll just make you explain in a very brief how the bracket order can be used. And right now the bracket order is only used for futures. It is not available in options as of now. And before going ahead and explaining you for the bracket order, I would like to make a small announcement about the options. We have recently gone live for the options to place market order in options. So as of now, market order in options was not allowed, being it index options or stock options. But right now, we have gone live in the last week itself. We have gone live, so the market orders in options would be allowed, but it's only for ITS, that is this N-Trade and Empowered is not allowed in Pro Terminal and the mobile app as of now. But very soon we will be coming out with this functionality in that asset classes also. But as of now, we just have market order which we have enabled in options, being it stock options or being it index options, in our N-Trade or Empowered trading portal. Now I will make you understand about the bracket order. Being bracket order is only as of now available in index futures and stock futures. It is not available in options as of now. So how to use bracket order? Suppose you want to go bracket order for SIPLA future. So you need to select, suppose you want to, buy SIPLA future. So bracket order is a 3-leg functionality. The first leg will go at market, and the second 2 legs are the stop loss order and the target price order you can place in the one single order window. So let us understand. Suppose you want to buy one SIPLA future, select under margin, select cover order. Under market, select bracket order. So once you select bracket order, by default your first leg will be at a market price. So bracket order, your first leg compulsorily will go at a market price, and once you select a bracket, you will you'll be able to place the order for the stop loss and the target in the one single order window. So suppose you want to book profit price at, suppose you want to book profit this future once you buy at 1100, and you want to place a stop loss at 1035, and limit price will be auto populated. So once you place this order, since right now it's offline, orders cannot be allowed. So once you place this order and confirm, your first order of SIPLA will be executed, SIPLA future will be executed at market, and the rest 2 orders will go into the exchange, the target price and the stop loss price. And if any of the orders will get executed, if the target or stop loss, the next order will automatically get cancelled. So this is how bracket orders functionality has been used. One more question is by Rajiv said, can you place this order after market hours? No, Rajiv, sorry. We can place this order only in the market hours. Mr. Chandrasekhar is asking, explain bull call and put spread strategy. Sir, can you just give a brief about what is bull call and bear call spread strategy, or bear put spread strategy? Devarsh, can you hear me?
Yes, yes, correct. Now I can hear you.
Yeah. So can you just give a brief about what is bull call spread and bear put spread strategy?
Yeah, so suppose Nifty is trading at 18,000 level, and suppose your view is that market is going to rise from here, but it is not likely to rise much more. It is say you are expecting about 2% move. So at 118, it comes to around 360 points. Now, so 18,000 and 18,360. So nearby strike, it's say 18,400. So you expect market to go from 18,000, and it should not go beyond 18,400 level. Now 18,000 call option you are buying, and but that when you buy an option, you basically pay the premium. Now if you want to reduce the cost, or you are looking at a range bound movement, simultaneously when you sell another call which is at the higher strike price, this strategy is known as the bull call spread or bull spread, as commonly known. Similarly, many traders, when they are bearish, they sell the nearby call and deep out of money put option. They will buy the nearby put option, and they will sell the deep out of money put option. For example, suppose you are right now, markets are 18,000, and you think that it has possibility of going down by 2%. So you buy 18,000 put option, and similarly, say 400 points lower, 17,600, put option you sell simultaneously so that your overall cost is coming down. And because of that, you can have multiple higher amount of positions also you can take. And if market does not move in the direction in which you have thought, then your overall loss is minimized. So these kind of spread strategies are usually used to reduce the overall losses in the case market doesn't move into your direction, and if you do not expect a very sharp move in your direction. Now, there are many strategies which can be done by selling options also, but we would not like to go into those strategies now, because for beginners it is better to buy nearby call or put and sell out of money call or put, and that way you can reduce the cost. I hope this has been clear. If you want, we have also done a lot of webinars and videos on YouTube where you can understand these things in detail. Taran?
Yeah, thank you, sir. So one more question from Krishnamurthy. What is the margin requirement for this bull call spread order? So this order which we have shown, we have already shown you the margin requirement. So this is basically the margin requirement. First, we have made you understand how to calculate the margin. So if you can see in my screen, you will be able to see 18,000 call buy, 18,300 call sell. So if I do this with a margin calculator, the margin requirement is 18,000 plus 6,000, around 24,000 is the margin requirement. One more question is by Chandrasekhar Jay, why you are not enabling FNO for NRI? I suppose the FNO for NRI is enabled, but it's only from NRO account you can trade. However, to do trading in futures and options, you need to opt for derivative privilege. But for derivative privilege for NRI customers, it's an offline process. So you need to fill in the offline form, and the form which you will be receiving from your branch. You need to fill in with the documents which are required and send to your branch, so that your branch can process to opt for derivative privilege in your account. So it has been allowed with an NRO account, and it is not disallowed. One more question by Mr. Rajiv is, I hold FNO position, but I am not able to place AMO orders, that is aftermarket hour. So the aftermarket hours order is possible in index futures and index options only as of now, but not in stock futures and stock options. It is available. Now, if you go into our order system, you will be able to see, suppose you want to buy 18,000 call option after the market hour. So here you'll be able to see we accept off-market orders, and these are the timings where you can place the off-market orders between 7 to 9:30, and after 12 o'clock in the midnight till next day 9 o'clock, you can place the off-market orders. But as of now, the off-market orders is only for index futures and index options, and it is not for stock futures and stock options. But yeah, you can place off-market orders with us also. Mr. Sankeet Bole is asking, Nifty options not available in HDFC securities. Mr. Sankeet, we have already started Nifty options in all our portals of HDFC securities, being it mobile app, being it Pro Terminal, and being it web trading portal, that is ITS, that is Trade or Empowered. However, as of now, it is not available in our Apple, that is the iOS version. In mobile app, it is available in our Android version only. Very soon we will be coming out with in the iOS version also. But yeah, FinNifty before 15-20 days or before 1 month, it was not available in our mobile app, that is for the Android version. But now it is available. If you are not able to see it, we'll request you to reinstall or upgrade your mobile app version, so that you can post that you will be able to see these options and can trade in FinNifty options and mobile app also. Mr. Gopal is asking, would both the leg of basket trade will be executed? Mr. Gopal, yes, if you have a sufficient margin, both the leg would be executed. But if you don't have margin, then only your buy leg would be executed and your sell leg will be pending. And then, because what will happen once you execute this, system doesn't know how much. System doesn't know that this is a hedging strategy. So if you so what will happen, your buy leg will execute, but sell leg won't get execute, because you won't get that hedging benefit of the margin which ideally you should get. So if you want to execute both your trades, first execute your buy leg. Once you execute your buy leg, the system will understand that that this is a hedging strategy, and post that, if you execute the sell leg, then it will smoothly get executed without any additional margin requirement. But if you initiate both the legs, then it will get executed. But for that, you need to have the overall margin without the margin benefits. If you have it into your account, then it will get executed. But if you have a small margin which is actually required once you are hedging any kind of an option strategy, then in this case you need to first execute buy leg and then execute the sell leg. So it's just a one click where you have to do it, where you need to execute buy leg and sell leg. Just one additional click would be required. Same day, how much margin required for trade margin calculator showing price or what? So same day, or if you do any kind of an positional based strategy, the same amount of margin is only required. There is no additional margin requirement for the intraday or the positional based traders for the strategy. Mr. Krishnamurthy is asking, can I get session recording option? Yeah, so it is already getting recorded in our YouTube channel. So in our YouTube channel under HDFC Securities channels, or in HDFC Securities channel, you will be able to see this recording of this webinar which we have been doing it. It's already live over there. So in future also, if you want to refer for your reference, you can do it by just going to our HDFC Securities channel in the YouTube. So Mr. Vinayak Chauhan is asking, how can I use a basket order to sell contracts at different price? For example, I need to sell 2000 contracts. Can that be achieved? How to use stop trailing using Pro Terminal for indices? So basket orders can be only be used for doing option strategy. If I'm not mistaken, you are just you are asking me about how to sell if you are having Nifty 2000 contracts, of Nifty options, and how to sell from the basket orders. So through basket orders, it's not possible. You can do it with our order slicing feature. So order slicing feature is available in our Pro Terminal. I'm sure you will be knowing it. You can use order slicing features to execute buy and sell big quantities of Nifty options or any kind of an Bank Nifty or Nifty options. It is a very useful tool for a big FNO traders. And the second one option is trailing stop loss order in Pro Terminal is not there as of now. It is only available in our N-Trader Empowered, the basic web trading platform. And Pro Terminal, there is a normal stop loss order which you can place, but trailing stop loss order functionality is not there. So Mr. Sukanya Rao is asking how to calculate margin, break-even, maximum profit, and maximum lot in bull call spread. So Sukanya, basically to check a margin, we have already showed you the margin calculator to how you can use the margin calculator. Now in that margin calculator, we also have the payoff graph, which will make you understand at what level you will be able to make profit, and at what level how much profit would be there. So this payoff graph, if you don't understand, you can also use the payoff table. So here it will be, you will be able to see how much profit and loss I will be making at different if market expires at different level. So this will help you to get a small understanding about your break-even point and the maximum profit and maximum loss for this strategy. But exactly, you won't be able to get the exact figure of maximum loss, maximum profit, and the break-even point. But with this payoff table, you will be able to gauge some idea about how the strategy will perform. Mr. Vijay is asking, I saw if we took 199 rupees, then 20 charges for order, it means entire order or based on lot. So it's in so you are talking about rupees 20 per order brokerage, which has been charged. So it's been charged on a one single order. So if you do a basket order, will consider the leg which you are buying and selling as a two different orders, and hence two different brokerage would be charged for that two legs. So this is per order rupees 20 rupees per order is for a one single order itself. It's not for a one single basket, for a one single order in a basket. Mr. Rajiv is asking when you are going to enable off-market orders in stocks FNO. So it's just because there is not much of liquidity in stocks FNO, hence we are not been starting these off-market orders. Right now, honestly, there is no as such plan to start in the near term, but we'll surely provide your feedback to start this stock futures and options off-market orders to our concerned team, and we'll try if we can bring this into our system also. So I think we have answered most of the questions. So sure, can we conclude?
We have enabled some market orders also. If you can announce that.
Yeah. So again, I'll just announce that right now we have introduced a market order in options, in index options, and also in stock options. That is in our Entrade and Empowered. So this is our Entrade and Empowered portal where you can use the market orders for not only for index options but also for the stock options. So now if you want to buy this Nifty, suppose you want to buy Nifty 18,000 call option of 12th January expiry, you can place market order. You can play once you place a market place order and confirm. So this will go into the system and you will get execute instantly. So that will help you to trade options in much more quicker manner, because market orders as of now was not available with us. Right now we have made available in index options and stock options both. But only in Entrade and Empowered, this is a basic web trading portal, but not in our Pro Terminal and mobile app. But very soon we will start in that also, so you can use that functionality in that trading portal. So that's it from our end. I hope this session was quite useful for your trading. So tomorrow being the expiry, you might have received insights about the outlook on the market, how to basically face tomorrow's trading session, and also for the next week, what are the support and resistance for the market that will help you for your FNO trading. And also this basket order and margin calculator will also help you for your derivative trading. So I thank you all for attending this session. It was quite, hope it was quite useful to you. I thank you for attending, and thank you all for attending this session. Have a nice trading day. Thank you, Devarsh, for providing the view on the market too, and thank you all. Thank you.